Hi, this is Charlie giving you Monday's market commentary. Hope you're very well. We're going to do some analysis on the stock market indices this morning because the currencies are a little bit dead in light of everything that's happening, or should I say not happening, across the pond. So we'll do some analysis on that. Before I go any further though, Thursday's webinar, we've had a load of feedback on it, both to Sam and even emails coming in directly to me as well. I thought I'd just go through a couple of those with you because it is nice to have people email in with just comments and feedback, and it is nice to have that sort of thing. So that was one that came in from John, and then I had another one, and obviously most of them come through to Sam, but it was nice that people emailed me direct as well. This was a nice one as well from Rich that came through as well. So it obviously hit the spot with a lot of people, and I was just speaking to another friend across down in New Zealand actually this morning who was listening to it, and he was saying how much he'd enjoyed it. So it's obviously hitting the spot with a lot of traders, so that's the main thing. It's really good to hear. And but what I would say, Sam's been inundated with inquiries about the package that was on the back of it. Firstly, if you haven't seen the webinar, then go to easytrader.com, click on the webinar tab, which is just off the screen here, and then if you scroll down, you can click on here for the recording of the part 2, and if you scroll down, then you can even have the previous one, which was part 1 of that. So you can click on there, so you can watch that video. At the end of it, at the end of the day, I'm making an offer. Kim and I are making you an offer for people who aren't already members of the Easy Trader community to come and join us. And so if you want to do it, it runs out today. So you're going to need to make a decision on that quite quickly, the offer that we've made. It's a fantastic offer. If you're really serious about getting on with your trading, and I talk about people that are playing at it when it comes to trading, and they play at it in various different ways. But if you want to be a part of a community and you want to be able to learn those skills to be able to do the sort of things that I'm doing with that account, then I don't see it as being any better place than the Easy Trader Trading Room. I do appreciate a lot of people obviously have full-time jobs, but you also have to look at, well, how could I trade around that? Could I trade for even if it's an hour or so in the trading room before I go to work, or an hour or so maybe in the evening? Whatever it may be, you can look at those things, and remember as well that the techniques and everything that's there with the trading, with all the package that we've put together, you can actually then apply those to end of day swing trading techniques as well. So there's a lot there for you. So if you're sitting there on the sidelines, you're thinking, oh, I don't know what to do, which Sam's had some emails like that through, then the Easy Trader community is something which will really try to propel you forwards in your development, and we continue doing that. We do it on a day-to-day basis with the training that we do within the trading room, and just with it around that as well. So not just within the trading room, but our members get to know what we're doing all of the time. So it's a really good place to further your trading education, I guess. But really the main thing is building that experience. You get to build your experience with us when we're calling and taking our trades as well. Right, okay, so that's that. Oh yeah, and so the offer I think is on yeah, where is the offer? I don't know. The offer was easytrader.co.uk/day trading. That's the offer, which is at the end of the webinar anyway. Right, okay. But if you haven't watched the webinar, then it's a must to watch the webinar, because from the feedback we've had, it's obviously gone down quite well with all sorts of traders, whether experienced or inexperienced. Right, okay, let's go into... Now I've got the S&P up, and I've pulled up a weekly chart. Now if you remember, a month or two ago, I was talking about the fact that we had these divergences in play on the S&P. So let's bring up the price comparisons again, because the divergences have started to diminish. So let's actually have a look at... Not that one hasn't. Okay, so yeah, so if we see this one first of all, the T2108 is the percentage of stocks that are traded on the New York Stock Exchange, which are trading below their 40-day moving average, above their 40-day moving average. And so as we can see, it started to drop off back a couple of months ago, were diverging against what the stock indices were doing themselves. So as the stock indices were making new highs here in the middle of summer, we can see that there were fewer stocks trading above their 40-day moving average. But as we can see, prices has meandered essentially in the S&P sideways for a while. You can see that actually the percentage of stocks trading below their 40-day moving averages started to pick up. sorry, above their 40-day moving averages have started to pick up. So I think if this S&P breaks out, there won't be a divergence left. Not on that one. Let's have a look at the percentage of stocks trading above their 200-day moving averages, though, and this is where we can still see there's quite a big divergence in place. So what does that mean? Well, that means to me that what could happen here is that we could have a nice breakout to new highs, which is what I've been talking about on the S&P anyway. Even though a lot of people are quite bearish on it, but we could get a breakout to new highs, and then further down the line, and this would take a long time to work off this divergence because this would have to come all the way up to obviously these prior highs over here. Then maybe from a higher point in this last quarter, then it makes another peak, and then it starts to roll over from there. So that's sort of how I'm looking at it at this stage. So I just thought I'd share that with you. So certainly at the moment, right now, it's looking like we could be wanting to come up and break to new highs. So we'll see how that's going to pan out. How could we what could we do with that in the meantime if it is indeed going to do that? Sorry, that's a 5-minute chart, not a daily. Well, I'd need to see the momentum switch. So I'm just going to look off screen at the momentum charts and bring up my daily charts of the momentum, which is essentially what we're getting right now as of Friday's trading. Anyway, I'm looking at the S&P futures charts just off screen, and we're starting to switch a little bit on the momentum side. So another positive day, and that would do it. And so that's again, we'll just be confirming that we should be getting this push up to at least these highs, and then we can then see if we're going to get a breakthrough. But at the moment, we've had a nice move down, put a doji in down at the lows there, and we've had a nice move back up. So far, it looks like the trend, because the overall trend has been up, is continuing. It would only be now if the S&P broke below the low of this doji last week, then all bets would be off and then something else is going on. But for now, we've put a nice retracement in, and now we've bounced back up, and we have to go with the overall trend, which if you look at a weekly chart is still up at the moment. I don't like the fact that we put these only marginal new highs in, because I don't like that sort of price action in a market, but we have to go with what the overall trend is, and for now it's up until proven otherwise, and it'd be proven otherwise by coming back down and breaking below this doji. Otherwise, then I think that very quickly this S&P. Now we could chop around for a few days because of obviously we've got the debt ceiling announcement on Thursday, so it could get choppy for a few days, but certainly it's going to be one to watch for Thursday, and see if it does actually break out, because I think if it does break, you've got to be on the long side of it, on the long side. So watch Thursday. Hopefully it chops around between now and then, and if it does break up, you want to be on the long side, because this thing could be going up into the upper 1700s, or if not further. So if we go out to well, there's not really too much, there's no other resistance to go to, but 1800 is certainly something which could be on the cards. Right, I shall leave it at that. I'm not even going to bother with the currencies because they're so tedious and boring at the moment that there's not really too much to say about them. If I go to the likes of euro dollar, as you can see, just very tiny ranges again. This is what's happening today so far. Very, very tiny ranges, so not really too much going on. As you can see, the average true range, it's abysmal. So not much going on there, so that's why I thought I'd spend a bit more time on the S&P this week. Hopefully that helps, and I'll be back on Friday for live trading.